So the presentation is visible to you?
Yes, sir.
Right. So we were looking at the cash book and I explained the format and let's just quickly look at the format. Yes. Now what you see at the bottom is basically the template that is used to maintain a cash book. So we call this as a double column cash book. You can also have a single column cash book where you will not see the bank column. You will not see this bank column. If you don't allocate a space for the bank column, means that is a single column cash book, right? So that we don't normally learn about what is a single column cash book because it's not relevant, because you can maintain both the columns where cash and bank both are maintained. So that is a double column cash book. So the cash book is separated from here with this line I showed you last week, and the particulars what you have on the left and the right are same except for two columns. That is this column on here, which is known as the discount allowed, and the column on the very right, which is the discounts received. Okay. Other than that, the rest of the columns are same. What are the columns? Date, particulars, voucher number, ledger folio, cash, and bank. Same is repeated here also. So the left is your debit and the right is your credit. So before going into the discount allowed and discount received, so we talked about the trade discount and the cash discount, right? So the discount allowed and the discount received is generally applicable when it comes to the cash discounts. When it comes to the cash discount, generally we do it for the cash discount, right? That's why we go and record it in the form of the cash book to record the discount allowed or the discount received at the time of the payment. Okay, right. We'll look at examples of how it is done. But before that, I just want to do a double entry example where I want you to draw up the double entries for each of these transactions, and we need to draw up the prime entry books also. Prime entry books also. So let us look at that example and then we'll proceed further. Right. So I hope all of you can see this example here. Is it visible? Can you all see this?
Yes, sir.
Right. So I want you to quickly draw up the relevant day books. I don't want you to write the cash book, but only the day books, right? How you will record these transactions in the day books. I'll give you about 4 to 5 minutes maximum. Quickly draw up the day books relevant for these transactions. Then after that, we need to look at what is the double entries are. But before, just draw up the day books pertaining to each of these transactions quickly. Okay, are we done? Can we look at this? I think I have given more time. So roughly you might get a similar kind of a time for in the examination also, like if you are to be using your time productively, maybe you can spend about 10 minutes to draw up these day books, right? So let us go through the transactions, like what has happened, the following credit transaction. So when you read, it says credit transactions. So it means none of these transactions are for cash. None of these transactions are for cash. So it's all on credit basis, right? Took in the business of Mr. Joe Pereira during the month of January. So they have given you the dates and what is the transaction and the transaction amount. So so you know that we looked at the day books, right? So this is how the sales day book look like. Then you also saw the purchases day book, and I told you similar to these two, you have the sales return and the purchases return, right? Okay. So now let's look at these transactions. So you are going to, I hope you would have marked. Let's go through the transactions and then we'll look at how they are marked in the relevant day books. So the first item on January 2nd, purchase of goods. Now you are drawing up the day books from the point of view of the business of Mr. Joe Pereira, right? So you are looking at these transactions from the point of view of Mr. Joe Pereira from his business, what he has done, right? So January 2nd, Mr. Joe Pereira's business has purchased of goods from Robert and Company, right? So this is like a credit purchase for rupees 22,000 from Robert and Company, okay? So if we look at the purchase day book, how will it appear? The date is given. Of course, there is no invoice number, so we don't have to worry. Supplier name will be Robert and Company. Description of the goods, we don't have these particulars, but we have the total amount, which is the 22,000. So whenever there are no adequate information, you can ignore these columns. When there is no description, quantity, unit cost. So when those information are not there, you don't have to worry about those in the examination. Even the invoice number is also not there, so you don't have to worry about it. So what is relevant, that only you will fill. Right. So which is a credit purchase. So it will go to the purchasers day book. Then January 3rd, they say purchase of goods from general traders. Again, a purchase from general traders for 30,000. Then January 4th, they say sold goods to Jayasuriya. There comes a credit sale. So where does it go? It goes to the sales day book or the sales journal. Then January 6th, sold goods to Ranjit. Again, sales day book, 24,000. Look at the transaction on January 7th. What has happened? Returned goods to Robert and Company. Now, on 2nd of January, you purchased goods from Robert and Company for 22,000. Out of which, now you are going to return some goods on the January 7th to Robert and Company, which is worth 2000 rupees. So it could have been due to damage or whatever that you are going to return. So now this return is not going to the purchaser's day book. It goes to the purchaser's return or return outwards. Return outwards. It goes into that particular book. Then they also say January 8th, Ranjit returned goods 4000. So who is Ranjit now? Who is Ranjit? Who is Ranjit for this business?
Data.
Data, yes. On January 6th, you have sold goods to Ranjit. So when you sold goods to Ranjit on credit terms, Ranjit becomes your debtor. Ranjit becomes your debtor. Like Jayasuriya becomes your debtor. Robert and Company, who are they? Who are Robert and Company? They are creditors. They are creditors. So for the business of Mr. Joe Pereira, Robert and Company and General Traders becomes creditors. Jayasuriya and Ranjit becomes debtors. So now what has happened? On January 8th, Ranjit returned goods. So one of your debtors is returning the goods. Why? Due to bad quality or some reason. So you can't say no to them and you have accepted the goods. So what happens here? Your debtor will not pay you this 4000 rupees. And it is a reduction of your sales as well. So as a result, you will record this in the sales return day book. Sales return day book or returns inward. Returns inward. Okay. January 9th, purchase of goods from Keels PLC. Again, it is to the purchaser's day book. Returned goods to general traders. You are now returning goods to general traders. So general traders is your creditor. So it goes into the purchaser's return day book and you will not pay this 6000 rupees. Out of the total amount payable to general traders, you will not pay 6000 rupees. Then January 12th or 10th, 12th, purchase of goods from general traders. So you are returning goods as well as you are purchasing new goods for 50,000. Sold goods to Samarajiva, sales day book. Sold goods to Ranjit, sales day book. Returned goods to Keels PLC. You are purchased, now you are returning. So that is purchaser's return. Samarajiva returned goods, that is sales return. Purchase of goods from general trade, again a purchase. Sold goods to Jayasuriya, that is a sales. Sold goods to Jeevan, that's a sales day book. Purchase of goods from Keels PLC, that is a purchase. Jeevan return goods, that is a sales return. So when you look at a transaction, you should know into which day book this transaction goes. That is very, very important. Now let's look at how these transactions will be after recording it in the day book. Now this is your sales day book. As I told you, you can consider the minimal information. You don't need to write every column. You have only the date, you have only the data or the particulars and the amount. I don't have any other information. I don't have the quantity, unit cost, all those details are not there. So I don't need to maintain all those. So you record all the transaction during the month with the names, who are your debtors, and the amount. Then you have the total here. Okay, then you have the total here. I'll come to that, what you do with the totals. Then this is your purchaser's day book. I hope if you have recorded the transactions, this is how it will look like. Okay, you can check for yourself. Okay. Then this is sales return, or you can call it as returns inward. And the last one is your purchases return, which will be only these three transactions. Okay, so this is how you record it in the day books, Now the second step is, based on what you have recorded, now you have to record the double entries or record the transactions in the general ledger or the particular ledger. Right. Now let's look at one by one. The outcome of the sales day book, that is this total, 167,000 for the month of January. Right. You tell me, where will you debit and where will you credit?
Debtors account debit, sales account credit.
Very good. Since this is not a cash sale, so I haven't received money. So where would I debit? I would debit the debtors account. Remember those names, very important. The sales day book, the total of the sales day book will go to the debit of debtors account and credit of sales account. I told you this. The outcome of the sales day book will go into debit debtors ledger, credit sales. So sales is your income account, debtors is your asset. Okay, right. Next one, purchases day book. So here you have done purchases on credit basis, which means Joe Pereira has not paid money for this. So what is your debit and what is your credit? What is your debit and what is your credit?
Purchasers debit, creditors credit.
Purchasers account debit and creditors account credit, right? So you remember, when you do a credit purchase, it will be always debit purchases, right? The transaction itself will give you the understanding of how the double entry should be. When you purchase, the debit will be purchases account. When you sell, credit will be sales account. So the purchases account is your expense and the creditors account will be your liability. Then sales return day book. What is the double entry?
Sales account debit, return inward account.
Sales what is the double entry? Can you please mute yourself? What is the debit and what is the credit? Debit will be to your sales return
account debit.
Yes, I told you, we never go and debit the sales account. We don't show the reduction in the sales account. Instead, we debit a new account called sales return. So debit will be in the sales return account. And where will you credit?
Debtors account.
Debtors account, very good. Because when I did the sales day book transaction, what did I do? I debited debtors, so which means the debtors have to pay me 167,000. and I credited sales. Now, when the return happens, what will that mean? Whatever that you have sold is now getting returned. So, which means the 167,000 will not be received from your debtors. Instead, you will receive it 12,000 less. So, how do I record it? I will debit an account called sales return because I don't debit the sales account. I need to show how much of sales was done actually. I will debit an account called sales return. And the credit will go to the same debtors account. So that it will be now not 167, 167 minus 12. Okay. Similarly, when you go to the purchaser's return day book, what is the double entry? What is the double entry?
Creditors account debit, purchasers return account credit.
Credit. So similar to the sales return, what we do, we don't go and credit the purchaser's account. We will instead credit an account called purchaser's return, because in a business, you need to know how much of sales and how much of purchases were done. The returns, that is the sales return and the purchaser's return, will be shown separately. Please remember that. So what do you mean when you return something that you have purchased means similar to the sales return, you have to record the purchaser's return now. So originally when you purchased on credit terms, you had to pay 193,000. When I say you, it is meaning that the business of Joe Pereira. So the business of Joe Pereira has to pay 193,000 for the purchases done. But out of which now he is returning 20,000. So effectively, now he has to record this 20,000 in his creditors account, because all these people are creditors of Joe Pereira's business. So now your creditors amount will come down by 193 less 20,000, less 20,000. So this you have to remember. This you have to remember, right? Let me show you on the board so that you will have an idea, right? Now we are looking at the T accounts. Right. So all together we had, you can see the screen, right? Is it visible?
Yes, sir.
Right. So we have sales account, we have the debtors. Then we have purchasers account, we have the purchasers account and the creditors account. Right. Now what happened initially? There was a sale. The total sales was 167,000. So I will debit debtors account, credit sales account. Okay. So how do I record this transaction? To the debtors account, I will put the opposite, sales. In the sales account, I will put the opposite, that is the debtors. So I have recorded that. Okay. Then for purchases, I debit purchases account for 193,000 and creditors 193,000. This how you record in T accounts. You have to remember that. How you record it. Right? Subsequent to that, what happens? There is a return. Sales return day book gives you a return of 12,000. So that 12,000, I will not go and reduce in my sales account. What do? I open another account called sales return. Sales return. So I will debit my sales return account and credit the debtors account. Why? Now the debtors need not pay me 167. They need to pay me less 12,000. So I will credit sales return 12,000. Similarly, the purchaser's return, I will not go and reduce my purchases. Instead, I will open a purchaser's return. Okay. Purchaser's return. So purchaser's return open, I will go and reduce the creditors now. I don't need to pay 193 now because I have returned goods worth 20,000. So purchasers return 20,000 and you will credit 20,000 there. Okay. So ultimately, I'll put that also here. 12,000 here, 20,000 here. Right. So when you are preparing financial statements, effectively, what is going to happen? Your sales will be net of these two. 167 minus 12. So it will be 155,000. Your purchases will be net of these two. That is 193 minus 20. That is 173. That is your P&L side of it. But what will happen to your debtors account when you try to balance it? So 167, 167. Right? So you need to now balance this account. Left side is 167, right side is 167. But you have only 12. So I need to bring in a balancing figure, which is 155. You see? So that will be your brought, call it as carried down, and brought down will be 1. Okay, this is double entry principle. When you credit, you have to debit. Similarly, in the creditors account, what will happen? 193, 193. So this side is more, this side is less. Less by how much? 173. That is your balance carried down, and your brought down will be 173. So you see, the 155 goes to your P&L, 173 also goes to your P&L. This is a positive number, this is a negative number because purchase means that's the expense. These two numbers, this 155 and the 173 goes to your balance sheet. 155 is an asset because that's a debit balance. 173 is a credit balance, so it goes to your balance sheet as a liability. I want you to take down this. If you have any questions, you can ask. Any questions? Anything you want to clarify? Okay, right. Now from here, I'm going into the cash book now. Okay, because that's why I just spent time on this. So if you understood this, now let's look at how this gets transmitted into the cash book now. Right? Now this is one of your debtors account. Let's say this is your total debtors account. So one of your debtors now comes and pays you, let's say, 25,000. One of your debtors come and pay you cash 25,000. So now what will happen? You are going to receive money. You are going to receive money. Cash is going to be received by the business. That is, Joe Pereira's business is going to receive 25,000 in cash. Now what is going to happen? When you receive cash, anything that you receive becomes your asset, right? When you receive something, the corresponding will be like it is an asset to you. You are receiving cash. So the debit will go into your cash account, 25,000. And who is paying this? It is one of your debtors. So which means already we have 155,000 to be paid by your debtors. Out of which now 25,000 is getting paid. So that amount will go out from your debtors. Is that clear? If any of your debtors pay you 25,000 in cash, that cash will get debited here to the cash account, and your debtors amount will go down by that amount. Is that understood?
So we cannot see the same fully.
Oh, sorry. Is it visible now?
Yeah, much better. Still the amount in what?
Right, okay. So just remember that you are debiting the cash account for the cash received and you are crediting the debtors. Similarly, now tell me, if you are going to settle part of your creditors, now you have 173,000 to be paid. If you pay in cash, let's say you pay 30,000 in cash to settle your creditors, what will you do? What will be your double entry? So when you pay cash to somebody, automatically your creditors will have to come down. So how can you bring this 173,000 down? That is by debiting 30,000 here. So when you debit 30,000 here, what is going to happen? Cash is going to get credited. Cash is going to get credited. So what basically happens is, when you are using cash in your business, there are only two possibilities. What is that? Cash can come into the business, cash can go out of the business. Cash can come into the business and cash can go out of the business. So when the cash comes in, we normally call it as cash inflow, cash inflow. When the cash goes out, that is known as cash outflow, cash outflow. Right. Now we have the cash book. So when you receive cash, money is coming into the cash book. What do? you will debit your cash book or the cash account. Cash account. So we generally call this as cash inflow. Remember the term because later on we will need this cash inflow. Similarly, you might have to pay for things that you purchase. So this is where you need to pay cash. You need to pay cash. When you pay cash out, the money will go out from your cash book or the cash account. So you will credit your cash account. You will credit your cash account. And this is called cash outflow. Cash outflow. Is that clear? Is that clear? So this is what is getting formed into a T account. Now you will see when you look at the T account, this side is your receipts, debit. This side is your credits. What is going out is the middle part. Okay. Now this is when you handle with physical cash. Physical cash. Now, as I told you, businesses can also make use of a bank account to record their business transactions. You can do business transactions even through your bank account. So, what happens here, again, you will receive money from your bank account. Receive money to bank. Also, you can pay out of bank. Pay money from bank. Right? Both can happen. Receive money to the bank or pay money from bank. This is where you will call it as deposits. This you call it as withdrawals. Understood? To your bank account, when you put money, that is a deposit. When you take out money, it's a withdrawal. So, how money can be deposited into the bank? You have two means of depositing money. Either you can deposit cash or you can deposit checks. You can deposit checks. Okay. But when you look at withdrawals from the banks, we generally make use of checks. So here, the checks that you receive, you will go and deposit. Here, the checks that the business will issue. So in this example, now when you look at it, going into the earlier example, that is Mr. Joe Pereira's business, you know, Joe Pereira will receive money from his debtors. Joe Pereira will receive money from his debtors. Now his debtors can give money in two forms. They can give cash, they can give checks, whatever. But when you are paying your creditors, mostly you would like to pay by way of checks. So you will have a checkbook given from the bank. Using that check leaf, you can pay your creditors. You will pay your creditors. Now, what is it that is important? All your deposits into your bank account will be recorded in the cash book as a debit in the bank column. In the bank column. So here we say this is in the cash column. This is in the bank column. That you have to remember. The debits are recorded in the bank column. Credits are recorded in the bank column. Okay. So all deposits recorded in the debit side of the bank column. All withdrawals or payments of using checks are recorded in the credit side of the bank column. Okay, so that is what the two-column cash book is. Two-column cash book. One column to reflect the cash receipts and receipts. One column to record the receipts to the bank account. One column to record the payments through cash. One column to record the payments through checks. Okay, or from your bank account. Okay, please take down this. If you have any questions, you can always ask. If you have any questions, please ask. So anything that you receive in cash will be a debit to the cash or to the cash account. Anything that you will pay will be a credit to the cash account. That is what you have to remember. Where the cash book will come into the picture is when there is an involvement of a cash or the bank account. That is in the form of checks or direct deposits that we will learn in the next chapter. Okay, right. Okay, so can we look at this question now? The cash balance of MN Company as at 1/1/2019 was rupees 50,000. They deposited rupees 30,000 in the bank to open a current account for business. The transactions of the business in the month of September are stated below. All checks are deposited in the following day as per the company policy. That particular line is very, very important. All checks are deposited in the following day as per the company policy. Right? So, when you initially receive the checks will be with you. The checks will be kept with you. So, you can only deposit it on the subsequent day as per the policy. As per the policy. So, the question is how you will record these transactions in the cash book. How you will record these transactions in the cash book. Okay, so there are a few more transactions on the second slide. Right. Now let's look at these transactions one by one. How you will record these. Okay, I hope you have the handout. So I'm going to make use of the board. So draw up the cash book. You can draw up the cash book. So you will need a double column cash book. Double column cash book. Don't worry about the discount allowed and discount received. We can ignore it. So we will record only the required ones. So the bank, the cash, bank, cash, date, particulars, date and particulars. That will be sufficient. Date, particulars, cash, date, particulars, cash, and bank. This is your credit. This is your debit. Okay, right. So they start by saying the cash balance of MN Company as at 1/1/2019. Actually, it should be 1/9/2019, but it doesn't matter. Was rupees 50,000. They deposited rupees 30,000 in the bank to open a current account. Right? So what have they done? Let's say on 1/9, right? They deposited, they have cash. So brought forward cash, that is 30,000. 30,000. Right? Sorry. This is 50,000. And they have deposited 30,000 in the bank account. So basically, you are starting your cash and the bank with these amounts. 50,000 and another 30,000. 50,000 and another 30,000. See whether you can record the balance transactions. Now record the balance transactions. We will also go through, I will also go through one by one, but you start recording the So let's look at the first transaction. On 1st of September, a check of rupees 10,000 paid to JD Limited. Now, how will you record this transaction? Tell me. A check of rupees 10,000 paid to JD Limited. What do you do? How will you record this transaction? Anyone?
Cash account credit.
Cash account credit. Now you are issuing a check, right? You are not giving cash.
Bank account.
You are paying.
Credit bank account.
Sorry?
Credit bank account.
Bank account credit.
Yeah, I'm asking in terms of the double entry. Can you somebody tell me what is the double entry? Then we'll look how we record it in the cash book. What is the double entry?
JD Limited accounts debit.
JD Limited account debit. Why? Why you are debiting JD Limited?
Because it is a creditor.
Yeah, very good. That is where you have to understand. JD Limited is one of your creditors, because according to this transaction, I am paying, I am paying in the sense, looking at it from the point of view of the business, right? MN company. JD Limited is one of my creditors. So I am trying to pay this creditor. I am trying to pay this creditor. I think some of you are not in a position to see the upper part of the board, right? So don't worry. I think the balance part you will see, right? Where I have written 50,000 and 30,000. Is that visible?
Yes, sir. We can see.
Right. So you are paying one of your creditors, who is JD Limited, by way of a check of rupees 10,000, right? So now, when you look at the double entry perspective, the debit is your creditors and credit is going to be your bank account while you are issuing a check, right? Now, whether the check gets paid into the bank or not is a different story. As far as I am concerned, the MN company is concerned, I have issued the check, so it has to get paid. So my first transaction would be on 1st of September. I'm going to say, if you want, you can say JD Limited, but I would rather prefer saying creditors. Okay. If you want, you can say JD Limited. Right. I have paid by way of a check, which means I'm going to credit 10,000. I'm going to credit 10,000. Right. Look at the second transaction. Look at the second transaction. That is little tricky now. Okay. That is little tricky. On 2nd September, rupees 12,000 received by check from Madura. What can you say? What can you say? What is the double entry? Now, who is Madura?
Debtor.
Madura is one of your debtor. So he is settling part of his debt to you. But how he is settling? He is not giving you cash. He is giving you a check. He is giving you a check. Now the problem here is, even though he gives a check to me, I am not going and depositing the check on the same day. Did you read the question properly? They say all checks are deposited in the following day. In the following day. So what happens is, it is a practice in businesses that when you receive checks, it is initially recorded in the cash column. In the cash column. That is an exception. That is an exception, which you have to remember. If you are not directly depositing it into the bank account, and if the policy is to deposit it on the next day, initially, we will record it in the cash column. Okay? Why? Otherwise, somebody can come and give you a check and that check can get lost. So there won't be any record of it. You can't do transactions like that. In a business, every transaction has to be recorded. So, as a result, when I receive this check of 12,000 from Madura, what do? I will go and record it. 2nd September, I will say Madura. Okay, right? Let us go by the name. I can say debtors also. But I will say here check. I will say check. And I will put this 12,000 there. Do you understand that? Do you understand that? That's very important. That is very, very important. When you receive a check, if you are not depositing the check on the same day to the bank account, you will not record it here. It has to be here. Right? So that is on the 2nd of September. Right. Third, there is no transaction. So, since there is no transaction on 3rd, now you have a responsibility. What is the responsibility? This check has to get deposited into the bank. This check has to get deposited into the bank. So what do? You get hold of your office assistant and you will fill in a check deposit slip. Along with the slip, you will give the check for 12,000 rupees to the office assistant to go and deposit it in the bank. Once you deposit it, you will record that transaction on 3rd of September, assuming that 3rd is a working day. Right? What happens? The 12,000 will come into your bank account and the entry that you posted in the cash column will have to go out. So that 12,000 will go out from your cash. Okay? Here we will say cash. There you will say bank on 3rd of September. Right? This is a classic example. How you account for checks when you receive and deposit it on the subsequent day. Very important. Please note that. On 2nd, I received this check, so I recorded it in the cash column. According to the policy of the company, they deposit the checks received on a particular day on the following day. On the 3rd of September, I will debit my bank column and credit the cash column. So now what will happen? The entry that I recorded gets knocked off. Now it remains only in the bank. Okay? Right. Next transaction. On 4th of September, 1,700 paid to settle the monthly electricity bill. What is the double entry? Quickly. What is the double entry? Now this is cash
Electricity
or
account
check.
debit.
What kind of a transaction this is? Cash or check? This is a cash transaction. If they have not said anything as check, it will be always a cash transaction. So on 4th of September, you will debit your electricity and credit cash or 1,700. Next transaction, 5th of September, 5,000 paid by check for salaries. So very straightforward. 5,000 salaries and you have paid out using a check. On 6th of September, 17,000 received by check from Kolita. So very straightforward, like the 12,000 you recorded. One of your data again, which is 17,000. Okay. On the 7th, you have purchased goods for rupees 5,000 from Milod. That is a cash transaction. So on 7th September, purchases the cash purchase. Okay. Then on 10th of September, rupees 350 was charged by the bank for a dishonored check. Now, one of the checks that you have deposited is returned. Dishonored means the check has been returned by the bank. So we don't know which check it is. We don't have to worry about it now. What they say is rupees 350 has been charged by the bank on 10th of September. So when the bank charges 350, what happens? That charge is directly collected from your bank account. You are not going to pay cash for it. Okay? It will get deducted from the bank account directly. So what will happen on 10th of September? If you come to know, you will debit account called bank charges and credit your bank account with 350. With 350.
Excuse me, sir.
Yes. Yeah, you
Sir,
can ask the question.
on the 7th
Yeah.
day, we have to deposit 70,000 check to the bank.
Yes. Yes. Very good. So I was waiting somebody to ask that question. Right? That's why I kept a space here. Did you note that? That's why I kept a space here. Right? Good that you raised that question. If no one raised, I would have brought it last. But good that you raised it. Yes. According to the policy of the company, this check has to get deposited on the subsequent day. So on 6th September, you have received this check. We are just ignoring the Saturdays and Sundays. Don't worry about it. We are just going by the calendar days. So 7th of September, what you need to do? You need to deposit this check. So cash 17,000, sorry, here 17,000 to the bank column. And on 7th September, from the cash, 17,000 will go out. Very good. So that is how you have to be. That's why I kept a space here and wrote this 10th September. Right. So the next one, they say a check was encashed for 2,000 for a customer. That's very interesting. A check was encashed for rupees 2,000 for a customer. Now, who is a customer for you? Somebody is coming to you with a check where they want rupees 2000 given to them. So you need to collect that check and you need to give them cash. Okay. So that is happening on the 14th. 14. So you will accept a check. Here there is no record to say that it is from whom. So let's say you will receive from a customer, let's say it's a check and it is for 2000. Okay, and you are going to give out cash. So on the same day we have to record it, 14 September. So basically what happens here is there is no impact to this transaction as far as the business is concerned, because you have received a check. Instead of that, you have given cash. Now what happens if this check gets bounced when you deposit it? Then only you have a loss, because you trust this customer and you accept this check and give them cash. So on the subsequent day, what will you do? You will put it to your bank account, and here you will credit cash. Okay, so basically you have given out cash. And the last transaction, a computer is purchased for rupees 30,000. So that is on the 25th. So you can debit the computer account, and that is for 30,000. So that's all the transactions that we have. Okay. So now you have to balance the account. So balancing, you have a debit side, 2 columns, credit side, 2 columns. So find the totals. Find the totals. Total this, all 4 columns. So I think here you get 81,000. How much is there? I think the cash side is more. So 81,000 is here, and you put 81,000 there also. Okay. So you have to continue, because I don't know whether you can see the bottom part of it. So when you put that, what is your carried forward balance? How much you get here?
11,300.
11,300. Okay. You have to work for yourself. 30, 34, 51, 56, 68, 69,700, 70, 80. Yes, very good. 81. Now we balance the bank account 30, 42, 59, 61. And there 15,350. So again, you have to have a carry forward balance. How much is here? 30, 42, 59, 61. 61 here. So how much is there? Difference? 15,350. 650. 45,650. Correct?
Yes, sir.
Right. So, and you have to put here also same thing. Brought forward that 11,300 and the 45,650. So this is what is going into the next period. That is the next month when you start. These two balances will be your opening balances. That is where you start with your next month. Any questions? So recording transactions in the cash book is very, very important. You need to understand because this is going to be your basic. So you have to capture this very correctly so that you will understand whatever that we learn going forward. Right. So I hope the cash book recording transactions in the cash book is clear to you all. Especially with regard to the receipt of checks and depositing it on the subsequent day. Very important. Right. Okay, right. So the next item is where we need to look at discount received and discount allowed. Okay. Some of the times what happens when you are doing business, as I told you, when you want to encourage your debtors to pay you in advance or you pay full amount at once, you can encourage them by offering discounts. Okay. Similarly, when you are also making payments to others, those sellers will also offer you discounts, right? So we will be also very interested in to get discounts from our customers, like our sellers who are selling goods to us. So mostly these discounts happen at the time of when you do or enter into credit transactions, like credit sales or credit purchases. Okay, so that is what we are going to look at next. Right. So let's look at the two sides, which is a credit sale and a credit purchase. Right. So suppose you are the business and this is your customer A. You do a sale on credit terms. Let's say you do the sale for 100,000. Payable in 45 days. So this 45 days is your credit period, the credit period that you have offered, right? So when you do the credit sale, what happens? I'm just drawing small t accounts. So you have a debtor. Let's say I'm going directly into the customer's account and you have sales, right? So what you do, you will debit your debtor and credit sales, right? So today you have sold it, you are given 45 days. But at the time of doing this sale, you are giving a condition to the customer. Okay. I'll make it XYZ company, that will be easy. Right. Now you are giving a condition to XYZ company that if you pay me within 30 days, I'll give you 2% discount. 2% discount. Now what is this? You are saying the original contract is, yes, you can pay me this 100,000 in 45 days. That is what my credit sale arrangement is. But suppose if you pay me within 30 days from today, from the date of the sale, I can think of offering you a 2% discount. A 2% discount. 2% discount. Now, what does this mean? What does this mean? Uh, 2% seems to be very low. Let's make it 5%. So, if the customer really interested to get this discount or to enjoy this discount, what he needs to do is pay this before 30 days or on the 30th day to enjoy a discount of 5% of what? 100,000. 5% of 100,000. Let's assume this customer comes and pays on the 29th day. On the 29th day. Right? Now you tell me, how much money should this customer pay? How much should XYZ company should pay this business?
95,000.
95,000. Very good. Now, what do you mean by that? I told XYZ company that look, the sale that we are doing is 100,000 rupees. You can pay me in 45 days. If you are paying me in 45 days, you have to pay me 100,000. But if you can pay within 30 days from today, I can offer you a discount of 5%, which means you don't have to pay me 100,000. You can pay only 95,000. 5% discount means 5,000. So you can pay me 95,000. So let's assume on the 29th day, this company comes and pays. So what happens? You will get, I'm writing it here. I don't know, just see whether you can see the board. You will receive cash 95,000. 95,000. Instead of how much? Instead of 100,000. Now, when this person comes and pays you 95,000, your data has to go out. Your data has to go out. Because this has to get settled. Now, look what is happening. You are crediting 100,000, debiting only 95,000. So, how will your double entry balances? Your credit is 100,000, debit is only 95,000. So what needs to happen? What needs to happen? There should be another debit of 5,000 to balance the double entry. Now see, 100,000 gets settled from the debtor, but he pays only 95,000. What happens? There is a remaining 5,000, which is the discount. Which is the discount. So now, from the business point of view, did you give a discount or did you get a discount? What did you do? From the business point of view, did you offer a discount or did you get a discount?
We offered a discount.
We offered a discount. So that is why this is called discount allowed. Discount allowed. You see? So this discount allowed is actually an expense. This is an expense. You don't get that amount. Right? Even though you did a sale for 100,000, in terms of cash, you got only 95,000. So this is one of your expense. This is what you get reflected in the cash book. In the cash book. So theoretically, what happens is, when you receive money, how do we record it is, we credit the debtor for 100,000. We put 95,000 in the cash column, 5,000 in the discount allowed column. Do you understand now? Let me show you again. Now in this cash book, you will see, when you get the 95,000, you put it in this column. The 5,000 comes here. 5,000 comes here. But actually, the double entry is, you will debit 95,000 cash and 5,000 discount allowed. Discount allowed. Do you understand that? Do you all understand that? How this discount allowed works? Discount allowed. Similarly, let's look at how the discount received is. Right? Again, I am the business. I do a credit purchase. From Element company. This is for 50,000. And they say, let's say 250,000, big amount. And they say, you can pay this payable. I need to pay payable in 60 days. Payable in 60 days. So what do? I will go and record it. Purchases 250 and Element company or the creditor 250. Okay. Now at the time of this credit sale or credit purchase, he gives me an offer. If you pay within 45 days, now Element company is telling me, if you pay within 45 days, I'll give you a discount of, let me make it an odd amount, a discount of 8%. A discount of 8%. Right. Now, tell me, if you want to enjoy this discount, one thing is that you need to pay within 45 days of the purchase or on the 45th day. But tell me how much you will pay. How much you will pay?
230,000.
230,000.
30,000.
Very good. How that 230,000 came? If I am to settle it within 45 days, I will get the discount is 250,000 into 8%. That is 20,000. So, why should I pay more? If I go and settle it within 45 days, I don't have to pay 20,000. I have to pay less 20,000. So, which means I have to pay only 230,000. 230,000. Now, let's look at it. When you pay it, what will happen? When you pay it, what will happen? When you pay, you will pay cash 230,000 only. So that you have understood. Similarly, when I make this payment, my dues or my creditors will go off. So that is arrangement. That is a full and final settlement. So I am debiting creditors or Element company 250, but I am crediting only 230,000. So I need to credit somewhere another 20,000. Another 20,000. So what is this place is called now? This is discount received. Discount received. Do you understand that? How the discount allowed and discount received work? Right? Okay? Take down. Okay, right. So that is all about discount allowed and discount received. So what you do at the time of recording the cash receipt or payment, you have to record alongside the discount allowed and the discount received in the respective columns of your cash book. Okay, right. So we come to the last part. So the last part is actually the petty cash. Okay. So when the business volumes increase and the transactions volume increase, sometimes businesses want to keep a small portion of cash to meet the expenses of small nature. Expenses of small nature. Say, for example, sometimes you might have seen in your respective organizations, there are people who might go to several places during office hours. Say your office assistant might go to the Inland Revenue Department, or might go to the central bank, or might go to some other place to collect documents or to hand over documents. So when they visit these places, they might sometimes get reimbursed the taxi fare. They might want to get reimbursed the taxi fare. So the taxi fares are very small amounts, 250 rupees, 300, maybe leading up to 1000 rupees, where you don't want to go to the main cashier or the accountant to get that amount reimbursed. Okay. Or in other words, sometimes what happens, all of a sudden there is a customer visiting you. So you want to serve them with some lunch, or maybe say with a snack and a tea, especially. So you can't just go and ask your accountant or the main cashier to give a small amount to do these type of transactions. So what happens, organizations, they decide upon a small cash amount which is maintained as petty cash. Similar to the main cash book, another cash book is maintained which is known as the petty cash book. The petty cash how does this operate is, at the outset, you decide on an amount, let's say a small amount, 10,000 rupees. So you give this 10,000 rupees to a person who is identified normally as a petty cashier. You give that 10,000 to this petty cashier. So from the main cash book, you give out 10,000 to the petty cash book. So what will this petty cashier do is, he will keep a record of all transaction he does with that 10,000 rupees, with all the documentation, vouchers, maybe cab vouchers, or the bills that you obtain from the pastry shops, maybe the coffee bills, whatever. Any small kind of expense that you incur, you might keep bills for those, and you will update a book called the petty cash book. So once you have utilized, say from the 10,000 rupees, if you have spent about 9,000 rupees by the end of the month, then when you go to the next month, you will be having only 1,000 rupees, which may not be sufficient. So what you do, you go to the main cashier, hand over bills and everything for the 9,000 rupees, and you will get it reimbursed. Once you get the 9,000 back, now you will start with 10,000 rupees in the next month. Okay. So this is a system where it works on a monthly basis generally, depending on the volumes of transactions that you do with the petty cash. Every month, you have a fixed sum to make use of. At the beginning of the period, you will have a fixed sum, and that will be utilized during the month. And at the end of the month, you will go and get reimbursed with the amount that you have spent after furnishing all the relevant documents. This system is called an impressed system. We call it as an impressed system. That means you are replenishing your cash position at the beginning of every month, or rather at the end of every month. So the petty cash amount can be decided by the company. It can be different from one company to another, one department to the other. It doesn't matter. The amount that you decide is known as the float amount. The float amount. So we call it as the float that is going to be paid into the petty cash at the beginning of every month. It is not that you give 10,000 at the beginning of every month, right? This is a system where you give 10,000, you partly use it, whatever that you have used during the month, you will go and give back the bills and get the balance money, so that you can start again with 10,000. Okay. So it is to record small cash receipts and payments. Generally, it is receipt is from the main cashier that you get, but on the other side, it will be mostly the payments. The main columns will be again bank, cash, receipts, and payments. Then you will also have some columns to understand what type of expenses that you have incurred. What type of expenses that you have incurred. End of the month, you will furnish all these information to your main accountant or the cashier to update it in the general ledger. That is what the petty cashier will do. Right? This is a small example to understand how you will maintain a petty cash book. Okay? How you maintain a petty cash book. Look at the transactions. Okay. So how this works? We will record it in a book like this. This is known as the petty cash book. Petty cash book. Right? So the main columns will be the receipts, date, sorry, I have another column. Then description, amount, right? And these are known as the analysis column. Analysis column. Okay. So what do we do here? Now, if you look at this example, they say following transaction in the petty cash book of Martin Limited for April 2019. So they are starting with rupees 20,000 at the beginning of the month. So on 1st of April, you are receiving 20,000, right? That is cash. So this is for the money that you receive. This part is for the money that you spend. Okay? So you have to be very careful with that. Now let's look at first transaction. On 3rd of April, you have spent 300 rupees for stamps. Generally, you have a column called voucher number, right? If you want, you can put it, or else you can just have a column called voucher number and put the numbers. Otherwise, you can capture it in the description column. So on 3rd of April, you are doing a transaction for stamps and the voucher number is 1 and the amount is 300. Right? Now, what do we do as part of the analysis is, during a month, you can spend money for several times for stamps. Okay? So, in order to keep a track of that, what we will do is, we will make use of some space of this as the analysis column. What do I do here? I will open a column as stamps and I will record this here. Okay, I will record it here. Then the second transaction on 5th of April, coffee. And the voucher number is 2. You have spent 150. So I will now not go and open a column called coffee. Otherwise, you will have to have names for everything. No. What we do is we call it as refreshments. So whatever you buy, you can put it there. Coffee, pastries, whatever you may buy, you can put it there. So the 150 will come here. 150 will come there. Okay. And the last one, 7th April, let's say you can call it as charity. And here you can call it as donations. So how much is that? Option number 3, 5,000. Okay. So what we need to do is, when you are maintaining a petty cash book, you need to limit the number of columns here. You can't have for every item that you write here as a column there. Now you see coffee, I have put it refreshments. When I pay for pastries, I will put it under refreshments. Sometimes what happens, you can buy stationery. So I can create a column called stationery. When you buy pens, A4 papers, everything will go under stationery. So let us assume that the month is over now. Month is over. So what do you do? Now you have to total. So here you have 300, 150.
So there is another transaction.
Sorry. Oh, another transaction actually. Yes, I have missed it. Okay, on 8th of April, again, they have bought stamps for 1,800. Yes, thank you. Thank you very much. So now you can find the totals. Right? 2,100 here, 150, 5,000. Right? So how much is that now? 7,250. So even when you total this, you should get 7,250. 7,250. So actually you started with 20,000. Now you have only spent 7,250. So actually, what is the balance carried forward? That is 12,750. Am I correct? So that will come as the amount that you have for the next month. Now what should the petty cashier should do? Petty cashier should go to the main cashier and hand over all the vouchers, bills, everything for this breakdown of 7,250. He will hand over everything to the main cashier and get the 7,250 again, so that you will start the next month again with 20,000. That is what this impress system is. Okay, so you can take down this. So we have spent a little time on the prime entry books because that is important, which will give you the basic for cash transactions, prime entry book transactions, because later on we will be just running through the double entries, debit debtors or creditors, whatever that we will say that. So you need to understand at that time. So that's why I have spent little time on this. So I hope it would have helped you. So it's almost 5:30. We have come to the end. Please do revise. And also, I think there is a handout in the portal on bank reconciliation. Please make a note that I might replace that handout because I just want to add some more questions to that. So if you have already taken the handout, don't worry, just have it also. But if not, just wait for this week, coming week. I might try to replace it before Tuesday or Wednesday so that you can take it thereafter. On Wednesday, probably you can take it. Right? Then there is another announcement that I need to make. I think the examination dates are already closed. But I am told IBSL informed me that to give you all the message, it has been extended till 15th of August. Where you can apply for the examination, but now this will be at a penalty that you have to pay a penalty and enroll for exams. Those who have not enrolled yet, you can do so before 15th of August. Okay, right. So please do revise all the work that we have done and what we did today, and we will meet up again on next week. Take care and bye.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.